The banks all are beating on the bottom line. A couple of minor caveats, though. Firstly, JPMorgan revenues ahead, EPS comfortably ahead, $4.50 a share. Forecast was for $3.10, but that is driven by a bigger reserve release than expected of $5.2 billion compared to an expectation of $1.1 billion. Some therefore saying it's slightly flattering the bottom line. Jamie Dimon said, quote, "We do not consider this core recurring profit," though worth pointing out that capital markets for JPM, as for Goldman Sachs, fantastic across the board. That theme continuing in from last year. A similar theme in Wells Fargo's numbers. EPS 105. The forecast was 71 cents per share. Wells Fargo breaking out that there was a 28-cent boost to credit loss due to that credit loss aspect, which theirs was a $1 billion benefit. The forecast was for a $170 million cost. Though it's worth pointing out that while this can't be repeated forever, it probably can be repeated for quite a few quarters, given the amount of reserves they built up last year. And of course, it's only because of better economic outlook that they are releasing these reserves anyway. On to Goldman Sachs, who, like JPMorgan, had fantastic capital markets performance. If we were being picky, we could point out that asset management revenue, $4.6 billion against a forecast of $2.5, did come because of $3.3 billion of equity investments, i.e. not all traditional asset management fee income. And equity trading, if we pick out that line, a huge $3.7 billion versus a forecast of $2.3 billion, did have $1.1 billion in financing in it. But this is a monster quarter from Goldman Sachs. Revenue, $17.7 billion. The forecast was $12 billion, up 102% compared to the same quarter last year, and up, perhaps more impressively, 51% quarter over quarter. We said last year this was a year for investment banks. How long can it go on? Not only has it gone on into Q1, it's gone up by 50% quarter over quarter, 100% year over year. Big beats on the bottom line for Goldman Sachs as well. But if we look at the stocks, Goldman Sachs up 1.3%, only 1.3%, you might say.
Shepard Smith here. Thanks for watching CNBC on YouTube.